Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at the market cycle return on investment, or ROI. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. We do have the sale on the premium list ending very soon, so make sure you guys check that out if you want to lock in the low rate. Let's go ahead and jump in. So what we're going to do, a brief outline, is we're going to first look at the market cycle ROI of Bitcoin as measured from the bottom, and then we're going to look at it as measured from the halving. I try to provide an update on these charts every 2 or 3 weeks or so that you guys are able to stay up to date on where things currently are. A lot can change in crypto in just a few weeks, as we just saw Bitcoin go from a very modest $29,000 up to around 50K. This chart first shows cycle 1. This is the very first cycle as measured from the bottom. This is before the first halving even took place, and is a reason why some people completely discount this cycle. But we're going to include it just so we cover all bases and we're not cherry picking any data. In this first cycle, from the very bottom, we saw approximately a 700x move by Bitcoin, and it happened over just a few hundred days. If we look at the second cycle, we had a double peak cycle, and we've speculated many times that the current market cycle put for Bitcoin could in fact be a double peak cycle. We first identified this possibility back in December of 2020 when it looked like things were picking up relatively quickly, very similar to 2013, and unlike the 2016-2017 cycle, which saw a fairly methodical test of the 20-week moving average over and over and over again. This cycle, while it did not go up 700x, it still put in a very respectable 500x move from the bottom. This was the first sign of, in fact, diminishing returns from one cycle to another. 700x down to a more modest 500x. We look at the third cycle and we can see that the same thing has taken place again. From last cycle, we saw it just go up over 100x. Now, to get to identify the cycle ROI, you have to ultimately figure out if you're interested in daily closes and wicks. Are you okay taking it from a minute candle, or do you want to see a daily close added? If you just take it from the daily close, you're looking at just over 100x. We know that Bitcoin did go all the way down to below $200 back in 2015, and then it went over 20K by the end of 2017. So it was able to go over 100x. Now, if you're unfamiliar with logarithmic scales, it's essentially where just each major tick is 10x. So this is 10 to the 0 is 1, 10 to the 1 is 10, 10 squared is 100, 10 cubed is 1,000. So 1, 10, 100, 1,000x. Okay, 700x, 500x, 100x, just over 100x. In fact, it's not 100x, it was just over 100x move from the market cycle bottom. And then if we put on the next one, the fourth cycle, which is the one we're currently in, this is what it looks like. Okay, this is what it looks like. And back in April and May, I said, you know what, guys? I personally feel like we're ahead of schedule. It's doing things I did not think it would do this quickly. But I speculated back then that similar to cycle 2, at one point cycle 4 was ahead of cycle 2, and we were not able to keep pace with it. The speculation was, hey guys, I know we're ahead of schedule now, and people are calling for 300K Bitcoin by September, but if history is any indication, that is going to be a very difficult milestone to achieve. Now, since then, a lot of people have pulled back some of their price predictions, but you could argue that it was pretty apparent all along on the chart that it was very unlikely to go to 300K that early. Now, when we look at this chart, we can still say, well, we're still sort of intertwined around the last market cycle ROI. So to completely dismiss the possibility that we track it is probably a little bit ignorant. And I do think that it's unlikely to happen. I would say it's much more likely that the ROI from this cycle stays below this yellow line. I would contend that it's going to come somewhere out here, but I cannot fully know. We will not fully know until the cycle's over. But I do contend that we will not be able to keep pace with the last market cycle. For instance, in order to keep pace with it, by the end of the month, the price of Bitcoin would probably need to be around 30x from the bottom. From the bottom, we had around a $3,100 Bitcoin, so we would need to see around a 90K Bitcoin within a month or so for us to continue to keep pace with the prior cycle. I personally think that that's unlikely to happen, And if it does happen, if it does go to 90K within a month, the idea of it continuing on to 300K a couple months after that seems a little bit unlikely. So what we've noticed is that we've had diminishing returns so far, and we've had lengthened cycles so far. Now, these theories are not mutually exclusive. Again, as I've said, you could have one without the other. You could have diminishing returns without lengthening cycles. You could have lengthening cycles without diminishing returns. The longer the cycle, the more likely it's not going to have diminishing returns. But I would still contend that the path of least resistance for Bitcoin is to continue having diminishing returns. Because again, the first cycle put in 700x, the second cycle put in 500x, the third cycle put in 100x. If it's hard to visualize this, first we can go look at this chart, which gets rid of the bear markets that followed. We can just look at these moves and see how we came down and lengthened every single time. Now, could it be that this is the first cycle that does not lengthen and does not have diminishing returns? Anything is possible. Again, I'm just dubiously speculating over here. Now, one of the things we can do also is show this on a linear scale. Sometimes a logarithmic scale has a way of masking what actually happened, because it's not necessarily intuitive to understand a logarithmic scale. If you're more familiar with linear scales, this chart might better show how we are experiencing diminishing returns from one market cycle to another. If you look at this chart, this is cycle 1, this is cycle 2, cycle 3 is down here, and by the way, cycle 3 was still crazy because we still went up over 100x. The current cycle that we're in, it's this purple line that's barely distinguishable from the x-axis because it barely comes off of it. This is a clear showcase of the idea of diminishing returns for Bitcoin. Now, I don't say that to say that Bitcoin can't go up. Even diminishing returns for Bitcoin are still better returns than you're going to find in basically every other asset class. There's going to be diminishing returns continuing to, every cycle. We will not be able to put in a 100x every cycle. Now, the people that would argue against diminishing returns, in my opinion, are not arguing against diminishing returns from the first cycle or the second cycle. They're only saying we're not going to have diminishing returns with respect to the last cycle. Because in order to argue it against the first and second cycle, Bitcoin would need to go to $1 to $2 million this year, especially if it's going to peak this year, $1 to $2 million this year for us to have any chance of getting up to these levels. Okay, so the main argument against diminishing returns is not from cycle 1 or cycle 2, it's just with respect to the third cycle, because that's where the 300K predictions by Bitcoin come from. The idea that it should be able to go up 100x from the bottom just like it did last cycle, but before that, the preceding cycle had actually gone up 500x, not 100x. So that's sort of what we're looking at. And again, the purple line, in all the gains that we've seen from 3100 to 64K, it's still hardly off the y-axis, or hardly off the x-axis, especially when compared to prior cycles. Now, some of you look at this and say, this is irrelevant. No one cares about the market cycle bottom. And while I would disagree with that statement, I do think it's at least important to show the market cycle ROI from the halving, because there are a decent number of people who prefer that. I myself find it interesting, and interestingly enough, it also tells the exact same story. Namely, the story that it tells is that you still see diminishing returns from cycle 1 to cycle 2, and you also see lengthening cycles from cycle 1 to cycle 2. The first cycle took place over around 370 days after the halving and went almost up 100x. The second cycle took place a little over 500 days after the halving, or it peaked 500 days after the halving, and went up a more modest 30x or so. So far, we have not even reached the 500-day mark after the halving, and so the argument is, well, what if, in keeping with the prior move or 2-point data trend, which is extremely dubious to extrapolate from, I will grant you that, what if the next one lasts several hundred more days? What if it doesn't have to peak this early? What if 64K is not the peak? Now, is it possible that 64K was the market cycle peak? Well, anything's possible. Of course, anything's possible. I don't think that 64K was the cycle peak, but we have to contend that anything is certainly possible. Now, in keeping with that, if that had been the cycle peak, we would have had diminishing returns, and then it would show that the lengthening cycle argument is completely out the window, because then it says, all right, this was just a random move, that this one was shorter and this one was longer, and then if this one ends up being shorter than this one, Okay, if this one ends up being shorter than this one, then we can say, all right, lengthening cycle stuff no longer makes sense if in fact 64K is the peak. Now, as measured from the halving, we're already getting close to the point where the cycle has lengthened. Now, of course, I will not claim that lengthening cycle theory is true if we get a market cycle peak in 2021. But as measured from the halving, remember, the halving happens in a different month every year. In the first cycle, it happened at the very end of the year. In the second cycle, or I should say the halving in 2012 happened at the very end. In 2016, it happened in July. In 2020, it happened in May. Therefore, this cycle, it happened a couple months earlier in the year than it happened last cycle. So in order for us to not have a lengthened cycle as measured from the halving, we would only need to get to like November or so. You can see we're getting fairly close already because the last cycle only went up maybe around 520, 530 days. We're already approaching the 500-day mark or so just in maybe another month or so. So again, I'm not obviously claiming that we would experience lengthening cycles if the cycle peak happened in 2021. I'm just saying that as measured from the halving, it would be lengthened just because the halving occurred earlier in the year this cycle. But again, I prefer to measure it from the cycle bottom, which would imply the cycle could actually extend into 2022. So I hope this has been a fairly interesting discussion about the ROI, the market cycle ROI from Bitcoin as measured from the market cycle bottom or as measured from the halving. Of course, both of these are just nothing more than theories that have not been necessarily battle tested for many, many cycles. I have no idea what's going to happen at the end of the day. It's always possible that we have diminishing returns without lengthening cycles. It's possible we have lengthening cycles without diminishing returns. If I had to pick one, I would prefer lengthening cycles over diminishing returns because who doesn't want to have exponential returns, right? Who doesn't want to see your returns go up? I would prefer to see lengthening cycles than diminishing returns, but I think diminishing returns, you still have a case for it. Otherwise, if you didn't have diminishing returns, Bitcoin would already be over several $1 million today, and it would only take a few more cycles for every single Bitcoin to be worth billions of dollars if Bitcoin can in fact go up 100x every few years. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Remember to check out the sale on the premium list. You can find that in the description below as well. If you want access to weekly reports and videos, the Telegram alerts channel, the Telegram chat room, the risk dashboard, and more, make sure you lock in the low rate. We only have about 3 more days. Thank you for tuning in. Subscribe, click the bell icon to turn on your notifications, and I will see you next time. Bye.